て、それではお時間になりましたので、これより
So
プ
we'd
ライ
like
バシ
to
ー保護
start
の
the panel discussion session on the topic Privacy Enhancing and Anti-Money Laundering Dialogues in Policymakers and Engineers. To begin with, I would like to introduce the panelists. First is VP Growth, Electric Coin Company, Mr. Josh Sweetheart. Next, Clinical Professor of Law, Cardozo Law School, Director of Cardozo Blockchain Project, Mr. Aaron Wright. APAC Regional Head, EPILIC, Mr. Ken Ugami, and Managing Director, Digital Finance Institute of International Finance, Mr. Brett Carr. And the moderator will be a professor from Waseda University, Professor Kazue Sako. So, Ms. Sako, over to you.
佐古様にお願いいたします。
Okay, thank you for the introduction. Welcome to the first session of BG2C. I'm very excited to moderate this session with beautiful panelists who are standing by. Before we start the session, I would just like to have a few self-introduction from each panelist, and I want them to introduce themselves and what do you do, and what is your relationship between blockchain. So I would like to start with Josh.
Hi, Kazu, thank you, and thank you for having me. So yeah, my name is Josh Swihart, and I serve as the Vice President of Growth for the Electric Wing Company. So we have a mission to empower everyone with economic freedom, and we build and support technology to provide access to a fair and open currency through R&D, engineering, regulatory relations, adoption, and demand generation in support of Zcash, which is a well-respected cryptocurrency with strong privacy protections.
Okay, thank you. And then, so I'm not sure how many people are aware of the cryptocurrency called Zcash in the room. Well, as Josh said, it's a very privacy enhancing. It has advanced feature than just simple Bitcoin. That's my understanding. Okay, thank you. The next panelist would be Aaron.
Hi, thanks so much. It's really a pleasure to be part of a panel with such esteemed co-panelists. My name is Aaron Wright. I'm a professor at Cardozo Law School in New York. I've done quite a bit of work in the blockchain space. I played a small role helping to launch Ethereum, which is the second largest blockchain. I've also co-authored a book that Harvard University published on blockchain law and policy. It's called Blockchain in the Law, the Rule of Code. And I've also had the opportunity to work with a number of different prominent projects in the space. It's really a pleasure to be here.
Thank you, Aaron. Okay, so the next panelist would be Ken. He's connecting from Japan.
Thank you. First, I'd like to thank everyone at FinSum to have given me this wonderful opportunity to speak today. It's a great honor to be here, along with many other distinguished guests. As introduced, my name is Ken Ugami. I represent Elliptic, which is the global leader in blockchain analytics. We're also the oldest running blockchain firm, established in 2013, headquarters in London. We currently also have offices in Tokyo, which is where I am, New York, and Singapore as well, obviously to cover the biggest, fastest growing market in this region, crypto. I come from traditional finance, quote unquote. I was in derivatives trading for over 20 years. And obviously during my career, I witnessed the phenomenal growth in an evolution of modern banking financial products. And also I witnessed that these things always came hand in hand with technological innovation. So when I first joined crypto back in 2017, it wasn't a particularly hard move. I was pulled down the rabbit hole, as people say often in this industry. But for me, I understood that blockchain technology and crypto assets was sort of a natural evolution of financial markets and products, and just was being built on a new technology called DLT. However, we all know that new financial products and markets always come with certain growing pains. And even traditional financial markets, in order to have a healthy functioning marketplace, we know that it requires proper oversight and regulation. We know that market participants have to play by the rules and comply with regulators. So, and otherwise, you have to pay the consequences. So, what we do at Elliptic is to help crypto businesses do exactly that, to give them the ability to track, monitor, and report any suspicious crypto activity that's linked to illicit entities. The purpose is to protect them and to help them comply with regulators. And we know that crypto businesses are going to have to go down this path of becoming regulated financial institutions, and I think this is unavoidable.
Okay, thank you. Okay, the last panelist would be Brad.
Yes, thanks, Kasumi. Good morning and konnichiwa. Firstly, thanks for the opportunity to join you today. I wish I was there in person. I do miss Tokyo. I've historically visited 2 or 3 times a year and always enjoyed great, stimulating and constructive discussions with the JFSA and the BOJ and our member firms in Japan. And I cooked teriyaki steaks on the barbecue for my family this evening as my very poor substitute of missing out on visiting one of my favourite cities. Also very grateful for the leadership of the JFSA through last year's G20 presidency in promoting greater consistency in a lot of the international regulatory rules, in data regimes, and in initiatives like this, and with the JFSA's leadership in initiating the Blockchain Global Governance Network, or BGIN, which I'm very pleased to be a part of. Like Ugami-san, I'm from more of a traditional finance background. At the IIF, we're a global membership organisation comprising about 480 financial firms from around the world. A very diverse membership base across banks, insurers, asset managers, sovereign wealth funds, some central banks and the like. And very much, I think, the interests that we most champion are those of international coordination, cooperation, consistency, as well as, I think, trying to promote greater public and private sector coordination and collaboration. And we've certainly had great partners at the JFSA and the BOJ and the Ministry of Finance in promoting each of those values. So very delighted to be part of this and to continue that dialogue in this virtual form. For me personally, I lead the digital finance team at the IF. We focus on, well, in the last few years, it's been very heavily about data policy issues, about privacy and about data protection, also cloud and the ethics around how artificial intelligence is used. But increasingly, it's about new payments initiatives, and I think it's also about digital identity. And certainly all of the conversations I've had in the last 4 or 5 months around what does the post-COVID world look like, I think universally every conversation has gravitated to digital identity. So that's where my focus in blockchain primarily intersects with the opportunities with identity. I think this is the big ticket item for the post-COVID world, the dramatic acceleration we've seen into digital channels, into increased expectations of customised services for customers. I'm going to finish this point with a quote from Professor Chris Grummer of Georgetown University recently, who made the observation that the big conundrum for financial firms in a digital world is concurrently how to be both personalised or tailored or customised for customers, and at the same time to achieve scale. And I'm convinced that digital identity is going to be central to that, and that there's a great opportunity for blockchain as part of that.
Okay, thank you very much. So digital identity. Yes, that's certainly a hot topic. And well, yeah, related to digital identity, people always want privacy because it's people's own right. But at the same time, identity, making sure this person is not doing bad things, we need this anti-money laundering and know your customer regulation. So the whole this session is going to be privacy and what are we going to do with this AML regulations. So the second round, my question would be, what is your pain points in these 2 keywords, privacy or anonymity, and AML restrictions? Who wants to start? Maybe Brad, because you talked about digital identity.
Sure, certainly. And I appreciate that I probably come at this from a slightly different angle to some of my esteemed fellow panelists, in that I'm probably thinking less specifically about cryptocurrencies and crypto assets and new coins, and more about, I think there's some broader existing issues in AML or KYC and digital identity. And those are areas where I think blockchain has a great opportunity to be part of the solution. I guess just to illustrate the magnitude of the problem. So we spend an enormous amount of money in trying to counter financial crime. the 10 largest American banks spend more on AML than the entire operating budget of the FBI. The top 5 UK banks spend more on this than the UK government spends on prisons. And what do we get for that? Well, according to Interpol's estimates, we catch around about 1% of illicit flows. I've seen some more generous estimates that have said we catch 2%. It's an appalling return on investment for the amount of money that's being spent in this space and for the very small dent we're making in illicit flows. So the question is, how do we get better? How do we get smarter? And there's a lot of things that can be done, but I think the one where there's most value or most gain to be made is in sharing information. And in some cases, that's the ability of firms, international firms, cross-border firms, to share data with each other, which doesn't always happen at the moment and is subject to a number of restrictions. The lack of the exchange between the public and the private sector, the absence of a feedback loop from law enforcement so that when banks and other firms are filling in the suspicious transaction reports, finding out which of those actually led somewhere, we have an absence of this. And one thing we've done at the IF, we've done a very detailed study of the adoption of machine learning technologies in AML. And what we've found is that firms all around the world are using these technologies, but when you're using them on existing data sets, you're getting a very, very small uplift. I don't want to create figures where I'm guessing, but maybe we're turning the 1 or 2% interdiction into 3%, or maybe it's 5%, but we're only scratching the surface. You need to be able to improve and widen and deepen the underlying reference data sets, and then the sets that you use to train your algorithms, and then you've got the opportunity to get a quantum leap uplift. So that's where I think there's probably the most obvious area of opportunity. And there's some of the issues that you mentioned about privacy and the fact that across different countries you have different privacy regulations, different privacy cultural expectations perhaps. You have a European standard where privacy is enshrined as a fundamental human right enshrined in GDPR, and that makes some of the cross-border movement of data challenging in cases. So you have a number of issues that where I think I would like to see greater information sharing within each jurisdiction and across each jurisdiction. There are privacy and data policy issues to consider. And I think blockchain could be part of enabling safe and secure ways for firms and government agencies to be able to share that data and ultimately help everyone to be able to catch bad guys. But there may be challenges in some of those jurisdictional issues that hamper that. And firms are wary of the liability that they can incur. So we whether or not you can have a single global ledger, so to speak, for that information sharing, or whether you're needing to focus on other forms of interoperability between different identity systems. I think that'll be a big determinant in how large a role blockchain is ultimately able to play. I'll make one final point in the space around the liability of data protection and I guess how the seriousness with which firms take protecting the privacy of their customers. If I can reflect on when we had an IIF event in Tokyo last year, and we had Scott Farrell, who led the Open Banking Report for Australia, as one of the speakers. And he made the point that where some talk about data as the new oil, he thinks data is the new uranium. That it's more like uranium in the sense that it has a half-life, it decays, it's only valuable if you have the infrastructure to use it. It's the question of how you refine it. And most of all, that you have to secure it and protect it, and that there are radioactive consequences for you as a firm if you don't secure it and protect it. So I think where we need to have the controlled, managed exchange of data as an enabler to better efforts to combat financial crime, there's a lot of value for private sector firms and retailers, e-commerce firms, as well as financial institutions, where blockchain technology might help to meet the identity needs in the economy whilst delivering some of that security.
Okay, thank you. So Aaron, from academic point of view, Brad mentioned a lot of issues, jurisdiction, security. Do you want to follow up on what you consider are the pains in this privacy and AML issues?
Yeah, absolutely. And I think Brad made some really important points about how blockchain technology may assist and or be a catalyst for global digital identity, and the need to be able to prove that you are who you are in a digital realm is a tricky technical problem, and one in which some blockchain developers appear to have some novel solutions. The question is always, how does that scale? How do you get that distributed widely so that it's used by not just a handful of people, but by enough people so that you can actually have a meaningful impact there? I approach these types of questions from a bit of a different perspective. I'm one that believes that blockchain technology over the long run, and that could be 5, 10, 15, 20 years, will eventually supplant the current global financial infrastructure. The reason I think that that will occur is much the same reason why I think the internet supplanted local, regional telecommunications companies. It's global in nature. It has a high degree of efficiency in terms of moving around things of value, whether or not that's something like a native cryptocurrency like Zcash or Bitcoin or Ether, or representations of those assets like we're seeing on more advanced blockchain solutions. So the question in my mind is really, how do we fashion rules that are made for something that's new? So I think a lot of the conversation today, we're talking about developing rules for, for an era when there was horses and buggies, instead of fashioning rules for an era where there's automobiles and planes. And I think that that's where we're going towards. And blockchains are incredibly powerful technology, but they also have some downsides. So for those that aren't as familiar with how blockchains operate, at least the ones that we've seen at scale, and I'm going to put Zcash aside so Josh could talk about that. But on large existing blockchains, they're operated by a network of computers, and information between those computers is shared and potentially able to be ascertained and discerned. And that is really powerful. It's a core aspect of how some of these earlier blockchains operate, but at the same time, it leaks a tremendous amount of information. And that leak of information can be used for positive areas, and I'm sure Ken is going to talk quite a bit about that when he gives his comments. But being the academic, I also think of some of the downside risks there. What we saw with the internet itself, which also leaks some information, it's been a tremendous engine of growth for connecting the world, but at the same time, it's been abused. And it's been abused particularly in areas that do not have the same protections for fundamental human rights as other parts of the globe. We've seen the ability of governments or other organizations to identify individuals that are operating on the internet. It's been used to censor information, to limit who has access to knowledge, and potentially used to enact some sort of punishment against folks that don't have the same political beliefs as those that are in power. My concern with blockchain technologies as they currently exist is that the same risk is apparent with these technologies as well. Instead of censoring somebody's access to information, using the technology and enough effort, you can pretty much identify transactional history or identify who is the originator of transactional history, and or create a whitelist or blacklist to preclude people from engaging in commerce. And as much as we've, and many folks have advocated and are concerned about the ability of the internet to be used to censor individuals, I think we should be equally concerned about the ability of blockchain technology, assuming, and this is the big assumption I started with, that it scales and does fundamentally change the infrastructure of global commerce, how it can be used to actually limit people's rights. I call that, and we've written about this in the book that I mentioned at the beginning, the Great Paywall, a complement to the Great Firewall that we saw implemented by certain governments across the globe. And I think that that's something that's deeply concerning. Technologists, I think, are also aware of these risks, and that's why they've spent a tremendous amount of time investing in kind of next generation blockchains that have more privacy preserving technology baked into its very fabric. And due to a concern that financial information can be leaked, can be discerned, we're seeing an effort by technologists to actually make more anonymous cryptocurrencies. Now, there's some approaches that try to balance the two together. And again, I think Josh is going to talk about that. But there's other technologists that do not have that concern. They really want purely anonymous cryptocurrencies. And if that's the approach that people take, that's concerning as well, right? That presents a world where we have something equivalent to cash, which is not in general traceable, but but operates at the speed of a blockchain, right? Effectively at the speed of the internet, or something that over time should approximate the speed of the internet. And that opens up a well of potential financial fraud, potential bad activity that can flow from that. So I think it's a tight balance when it comes to privacy. I think in most countries, especially advanced countries, there's an expectation that you will have financial privacy. There's a lack of an understanding that at least on current blockchains, you do not have the same level of financial privacy. And at the same time, we're seeing a movement by technologists to increasingly build purely anonymous cryptocurrencies, which are intriguing and very important to protect those fundamental rights, but at the same time could open up a lot of unintended consequences in terms of limiting ability of governments to effectuate sanctions or other types of controls, which we found thus far to be fairly effective in maintaining some sort of global order and peace. So it's a tough problem. The last thing that I'll just note before I turn it over to the other esteemed panelists, what we're seeing, though, is that the current regulations and even the landscape of what's emerging in the blockchain ecosystem, it's moving from centralized places where people buy, sell, and trade these assets to decentralized places. So places that are not run by humans, it's instead run by a series of smart contract code in order to buy, sell, and trade assets. That raises a very thorny regulatory issue when it comes to how do you regulate these code-based systems. And the current regulatory regime, at least as viewed by some technologists, is very difficult to comply with. And I'm sure we'll talk about that more. And that's incentivized them to basically ignore those rules and build things that just technically work at the way that they intended to work. And if it doesn't comply with certain laws or rules, so be it. And I don't think that's a healthy approach going forward. This trend is happening quite fast on these decentralized exchanges. Some of them have already surpassed in terms of dollar value being traded, some of the more established centralized exchanges, at least from the US's perspective. So things are moving quite quick. There's a lot at stake here. And I do think fundamentally we just need to think about a new regulatory approach. We really need to kind of fashion regulations for this technology, recognizing that it's different in terms of substance than what we may have seen before, rather than trying to kind of shove the genie back into the bottle and apply existing regulations related to it.
Okay, thank you. So we need a new regulation approach, and we need new technology to support those kind of new regulation approach. So I think, Ken, you can talk about some approach, help from technology to support that, and what's your pain in that regard?
Sure, of course, thank you. I think Brad talked about the difficulties and the costs involved of AML in the fiat world, and Aaron talked about the benefits and the hurdles of blockchain and how to harness that growth. We're in the business of providing AML solutions on the blockchain space. So it's quite interesting. So obviously, we all know that crypto asset transactions are all recorded on the public ledger, and we call that the blockchain. The data is publicly viewable and available, but fundamentally, it's completely anonymous. Now, at this point of privacy and anonymity, I think Aaron touches on this point as well, that in general, of course, it's quite natural for people to want to have, a high level of financial autonomy and privacy. Just like you don't want everybody looking at your bank account and seeing the contents, how much money you have or don't have, who you're financially linked to, and where you do your shopping, and so on and so forth. So cryptocurrency transactions provide people with all the technological benefits of the blockchain, but also that anonymity. But it's usually not because they want to be involved in criminal activity or there's a strong need to hide from law enforcement, but it's predominantly because they want to maintain that high level of privacy. Just like we want to maintain our data privacy or want to have our personal information hidden from public view. Now going back to Bitcoin, we now know that going back to say 2012, 35% of Bitcoin transactions were linked to or attributed to illicit activity. Fast forward to 2020 today, that number is less than 1%. And so this remarkable reduction is obviously largely due to the adoption of robust crypto compliance frameworks, thanks to regulators like the FSA, but also due to the usage of blockchain AML technologies such as ours that allows crypto businesses to monitor, trace the flow of funds, and identify the actors involved. So I would say the first pain point for perhaps is making people aware that, in fact, it's not the case that Bitcoin is used for mainly illicit activity, and it's quite the contrary at this point. And precisely because of the fact that the public nature of the blockchain and the ease of traceability, it makes it that much harder for hides to hide illicit fund moves, even if it involves tens or hundreds of wallet hops. Now, there are certain destinations and sources that do pose a problem for us for blockchain tracing. And that's when funds go to certain places called mixers and coin swaps. And also certain kinds of private coins that are private by default, such as Monero. Zcash is different, and maybe Josh might talk about that. We also do support Zcash for those reasons. But the point is, first of all, these entities can't be identified. And up until those points, the funds go to these places, or from the point these funds come from these sources, they're traceable. And so, and that's also why it took so little time to find the Twitter hack culprits recently. And the last point I'd like to emphasize is that what we do at Elliptic is not to sort of identify individuals or pry into people's private transactions, bring them out into the open. We're also not focused on catching criminals. We can trace them and track them, but we're not the police. We are, however, focused on helping crypto businesses protect themselves from these illicit actors, such as OFAC sanctioned entities, terrorist groups, dark marketplaces, ransomware scams, and so on. So our goal is to protect legitimate businesses and help them comply with global and regional crypto regulation, very similar to what banks do with their normal fiat transaction screening and monitoring as a part of the AML CFT compliance processes. And we have the technology to do that for them.
Great, thank you. So I think it was last month that there was a scam on Twitter saying like Barack Obama, and then they asked for sending them Bitcoin, but that one was arrested, right? So probably the technology like Elliptic use can really capture the criminals very fast. Okay, so Josh, we are all waiting to hear what you have regarding Zcash, but at the same time, I'm sure you too have pain points, so we are ready to hear that.
Thank you. I'm glad I get to go last because I get to respond to all of these things that were raised, which is phenomenal. Before I comment, I do want to say that I think it's important to create the distinction between anonymity and privacy. Sometimes we conflate those two. We use those two terms interchangeably. And they're not necessarily the same thing. So privacy is more akin to confidentiality, which I think it's alluded to. As Ken said, we don't want people having visibility into our bank accounts. And that's not just because that we want to protect something. It may just be, maybe because of, or hide something is because we need security and we need safety. And we have an expectation. I think we have a universal expectation that third parties around the world won't be able to view and to see our financial dealings. And so privacy is a necessary component of that. So we have this challenge, as Aaron alluded to, where blockchains are open. Most currencies run on open blockchains. And but that's evolving fast. Zcash isn't the only cryptocurrency that provides confidentiality, provides privacy, but many others, including Bitcoin, through the use of mixers, as Ken mentioned, and others are adding that capability. And I think what Aaron said is really important, that we have developed regulations and regulatory framework and legislation around our traditional financial system. But this is all moving to a new financial system, and it's moving very, very fast. And if we try to apply those traditional regulations and traditional regulatory frameworks to this existing financial system, it will be brittle. And unfortunately, I think there'll be some, as he said, unintended consequences in terms of how people will use these currencies, in terms of the technology that we developed. And I think as Brad mentioned early, we're doing a very poor job of tracking down folks that are money laundering today. We'll do a worse job in the future if we attempt to apply these traditional regulatory frameworks to new technologies. I will also say that where I disagree with Brad a little bit has to do with data and the sharing of data and how much data we're sharing. Because as we've seen, whether it's in the US, we've seen quite a bit in terms of hacks. The Cambridge Analytica hack of Facebook with the Russian government attempting to affect the US election. The Equifax hack, the Target hack, where 40 million credit card and debit cards were hacked. They hacked the US government and OPM, the Chinese. And we see this over and over again because anywhere data is stored online, it becomes a honeypot. If we store it, if companies are storing it, there's a high degree of trust that they have the ability to protect it. And unfortunately, the hackers are faster than those that are trying to protect it. And we usually don't find out about vulnerabilities until after the fact, until after all the data is lost. And so the question is how do we support, and the challenge is how do we support privacy and confidentiality? How do we support the safety and security of people, of our businesses, and even our national security, while transacting on an open peer-to-peer blockchain? And I think it will take some time and some thoughtfulness to figure out how to correctly balance those two things.
Okay. Thank you. Does anyone wants to comment to Josh's last comment? Or can I? No one? Okay, so with the remaining 8 minutes, I would like to talk about the future. So we sort of understood this is really a difficult challenge for us, but we are all smart. I mean, the humans are very innovative. So what's our next steps? That's my question. Okay, Aaron, you want to start?
Yeah, I'm happy to take that at least off the bat. I think Brad made some great points about identity and also information sharing. So I think when you're beginning to imagine what a modern version of our current AML, know your customer related regime looks like, I do think that those are two important points. The tricky part is there's not a huge incentive for adoption. Although it's different, and Josh made a wise point, anonymity and privacy and identity are all separate concepts. But when we've looked to other privacy-preserving technology that's been developed, it's had a hard time being adopted. And when we saw laws like the GDPR implement penalties, which served as a huge incentive for people to improve their privacy and data collection practices, at least if you agreed with the precepts of the GDPR, let's assume that you do, I think you're going to need something comparable here. If you want people to adopt digital identity regimes, there needs to be an incentive or a penalty for not doing that. And those types of basic incentives really, really do matter. I think secondarily, some of these liability questions or kind of the repetitive nature of the information that needs to be collected by each organization or entity over and over and over again for fear of liability should be re-examined. The fact that we can pool information and potentially create an attestation that's secure and digitally verifiable using blockchain technology can provide a huge advantage for that. I think that this is increasingly important, and I probably would not have argued for this a couple of years ago, but my big concern is that even some of the centralized exchanges, which has been the current locus for some of the recent regulatory guidance and activity, I think they're getting and soon may be eclipsed in the next couple of years by decentralized exchanges. And I think that the moment that happens, there is no centralized exchange, no custodial exchange that regulators in various different jurisdictions can look to in order to implement rules and regulations. So I think you need to move out to the edges, and the edges are really these identity related solutions. So I think that's critically important. I think the last point that I just want to make, and Josh and I think Zcash is a tremendous project. been a big supporter of it personally since the beginning. But what we're seeing is some of the technology that Josh's team developed, it's becoming more modular, and it's now getting baked into a whole host of other applications on other blockchains as well. So you're beginning to just see kind of a spread of some of that core technology, some of the more advanced cryptography spread into more and more of the blockchain ecosystem, and that's happening really fast. And not only is it happening really fast, even the notion of mixers is changing dramatically as well, where you have non-custodial mixers where parties don't even have custody of a coin in order to break a transactional record on chain. So that may sound like a lot, and I may have glossed over that for some of the folks that are not as familiar, but that's a big deal. It basically means that even the existing way we think of money transmission, technologists have effectively figured out a way around it using some more advanced crypto. So I'll leave it at that. One last point. Another thing that you may want to think about, we wrote quite a bit about this, is actually using code-based solutions. I think that there's some way to begin to incorporate or have like a checkpoint in some sort of government run or multi-government run code-based solution. I think that also could be an interesting avenue to explore.
Aaron, can I ask you a question?
Yeah.
So you've identified, and I think appropriately so, the risk of having decentralized exchanges, as Brad mentioned, the need for identity. Billions of users around the world don't have the means to do that. They can't KYC. They may not have an identification. How do you include all of those billions of people around the world who don't have access to an ID within this new financial system?
Yeah, I mean, I think that that's some of the hope with some of the newer identity solutions. So there's some solutions that are using web of trust models, or where maybe if one person in a group can satisfy those requirements, they can vouch or attest for other people. To the point at the beginning, the boundless human creativity, I think that there may be ways that we can accommodate that, but also accommodate some of the more stringent requirements for countries that do have more robust identity infrastructure. That's a really great question, Josh. I don't think I have all the answers there. But I do think a blockchain-based address at its root can be a really nice identifier, or at least a point to begin to build an identity structure, even if it's supported by more advanced crypto kind of on the base chain, et cetera.
So with Aaron or maybe Brad, one of the things FATF is considering for next year is whether to make the recommendation to outright ban peer-to-peer transactions because of the lack of identity. So how do we get ahead of those kinds of actions and those potential recommendations when we don't have a broad solution yet for greater financial inclusion?
Yeah, I mean, I think these are that, I understand the impetus to want to ban that. What I would caution is that practically you're not going to be able to do that just because the cat's out of the bag. I mean, decentralized exchanges already have hundreds of millions of dollars in daily activity. They don't rely on an order book, and they're, in effect, entirely peer-to-peer. So even if FATF says that's the rule, it's not going to prevent the hordes of people that are participating in these ecosystems from doing what they're doing necessarily without individual enforcement. And that's where the growth is. So, maybe you're able to limit the ability for existing financial institutions to participate in this ecosystem, but I don't think you're going to cut them out completely. And the risk then is that those existing financial institutions become the Sears Roebucks of the financial era, right? They were titans of their time, and then they're forgotten ghosts, 10 years later, or 20 years later. And I think that probably would not be beneficial, particularly from a regulatory perspective. You probably want a mix of the old and the new as you kind of rebuild this new financial infrastructure.
Well, I think that's a really important point, and it's important to the financial institutions themselves that they're not left behind in the new economy, and that they want to be able to participate and transact and provide services in the formats that their customers want to use, and they need to be able to keep pace with that development. Two things I want to highlight that I think are really important, and which are both meriting public and private cooperation. And one is that we've touched on already around the ability to share AML information, and I take Josh's point that it's really critical that information can be shared safely and securely. But the other, I think, is, and it may tie in a little bit with the question of how you incentivise or how you get people using an identity system, how you get firms or merchants using it. is, I think we're going to need to have successful deployment of identity solutions that have commercial merits before they solve the AML problem. That these will move faster than FATF or AML authorities may, but also they may have a different standard to satisfy. And if I think of something like the Open ID Foundation, led by Nat Sakimura in Japan, and the Open Digital Trust Initiative, there's a lot of opportunity here for a small business, a small merchant who suddenly in the COVID world is selling everything online or in curbside pickup or what. They're reinventing themselves as e-commerce businesses. And if they're, for instance, selling alcohol, they need to be able to verify the date of birth or the eligibility of their customer to buy the product. Now, they don't want to store the date of birth because then that's new data, personal data information that they have to store and protect and secure, the uranium analogy that I used earlier. They want somebody in an identity system that can come back and tell them, yes, this customer is eligible. And in doing so, the Open ID Foundation's initiative, I think, has a lot of opportunity to help ease the wheels of e-commerce for the small businesses that are trying to reinvent and ensure that they can participate in the post-COVID economy in a way that satisfies their legal obligations without creating new burdens for them in terms of how they store and protect data. I think there's a great opportunity for initiatives like that to really mobilise and galvanise the identity space for those commercial reasons. And that, I think, needs to become the proof of concept or the pilot that can hopefully engage more of some of the public sector AML authorities to get on board with what will hopefully become a proven concept. That's what I'd like to see and what I think will be a big part of the story and the success factors for the next couple of years.
Okay, thank you. I knew 40 minutes is too short for these wonderful panelists. We just we went over time. Well, thank you for your time today. I need to quickly close this session. Next session is coming up. So again, thank you all for participating. I hope you have some takeaways from this session. And thank you all for all the panelists. Thank you all.
Thank you.
Thank you.
Arigato.
どうもありがとうございます。以上をもちましてプライバシー保護技術の進展と AML 対策、規制当局者と技術との対話を通じて見
that
える
was
世
the
界
session
パネル
on
ディスカッションを
privacy
終了
enhancing and anti-money laundering dialogues in policy makers and engineers. Josh, Aaron, Ken, Yoko, thank you so much